What's in store for everyone today?
Oh, hello, Scott. Gosh, that week really flew by. I can't believe it's been a week already. But I got some stuff to talk about. Andy, my
Hey,
sidekick, hello.
hey Steve, how you doing, buddy? Scott?
Good. All right. So thanks everybody for tuning in to the Trade of the Week, part of our afternoon webinar series, typically at 2 o'clock Eastern, excuse me, 5 o'clock Eastern, 2 o'clock Pacific. And so we're going to talk about a few things market related, a few things trade ideas related, and maybe even take some questions and answers on the product. Kind of informal today, but we've got a little bit of a roadmap to follow. The first of the slides is the disclaimer. We are here to talk about the product, talk about the markets a little bit, and what it shouldn't be construed as is investment advice. So just reminding you all that anything you hear or see in this webinar today is not to be construed as investment advice. If you're looking for personal financial advice, you got to go to the guys who have the broker's license and the RIA license hanging in their offices, and they'll charge you a fee too. So at that out of the way, thanks for understanding. This slide is always one to talk about. We pride ourselves a lot on the onboarding and concierge of getting people into our product and up to speed as quickly as possible. And the learning curve, hopefully not too steep, is certainly helped by a lot of the things we offer here, mainly the trading room. The live trading room is free. And it's, in my opinion, it's eating the lunches of a few other trading rooms out there that are not free. And Barry Anderson does a great job with his content and his moderation and patience and showing off the product, helping people with cloud settings in real time throughout the day. So if you're not in the room, the live room, it's kind of the place to be because free is a good price. Cannot beat free, and you don't have to be a Trade Ideas subscriber either. It's open to everybody. Come one, come all. And then the webinar series that I mentioned earlier, the 5 o'clock Eastern series. Yesterday, myself and Jamie tackled some topics. Today is the Trade of the Week with myself and Andy. Tomorrow is Q&A with, I don't know if Dan's back in town, but Brad, maybe somebody else will go over some of the product and the platform stuff that's coming down the pike. Brad's usually 3 or 4 months down the road as to what's coming. So if you have questions about the software, he's a good guy to talk to on tomorrow's webinar. And then Thursday, Andy will take the lead and do the trading studio with Andy and Jamie helping on the sidekick shotgun. Friday, support sessions has been a big hit. We've been doing this for about 4 months now, primarily to kind of ease the pressure in the system for people who want more access and have already had their one-on-one session or maybe have not had their one-on-one session. For a limited time, we're going to continue to be giving one-on-one training sessions until further notice. But just a heads up, we're going to migrate to something a bit more scalable to kind of a educational series, 101, intermediate, basic, advanced, 301, things like that. So in the springtime, we'll have more announcements on that. But Friday support session is a great time for anybody to pull up a chair and the format we're using right now, go to webinar, come in, look at the screen, ask questions, and we can interact and get you guys pointed in the right direction. So all these things together really help keep this subscriber growth going, and this is from last year. We need to update this slide as usual, but we want to thank all of you for the attention that you're giving our product and the stickiness that you're staying with it and realizing the true value. I've been using it since 2003. That's kind of my claim to fame around here. I'm user number 3 in the system. After the CEO and the CTO gave themselves an account, they came to me for some beta testing. So I've been around the block a few times with Trade Ideas, and it's something I've used my entire career, well, since they've had it anyway. Brokerage Plus is the automated tool some of you may have been hearing about. But it only works with interactive brokerage, and you have to have a premium Trade Ideas subscription to basically connect the two using our Brokerage Plus tool. It's still in beta. They're working out a lot of bugs, and those are good bugs to be worked out because that'll help us migrate to the next platform pretty quickly. But for more information on that And mind you, this is not a newbie type of a tool. You really should have some skin in the game and some war wounds from trading before you attempt to start auto trading things using the robot. So it's an intermediate to advanced tool. It's basically what I'm trying to say there. All right, I'm going to continue to keep this slide because it's what we do. Paul Tudor Jones, one of the best living hedge fund managers, he's kind of reclusive and he doesn't come out much, but when he does, you pay attention, like that old E.F. Hutton commercial. When E.F. Hutton speaks, people listen, and I apologize for anybody under 45 that doesn't get that joke. So no man is better than a machine, and however, no machine is better than a man with the machine, and that's the whole concept. Holly, the AI, and the platform, and the scans, and the alerts and top list, those are our machines, and we are the human beings that are the discretionary part of the puzzle. So man and machine can work very well together, and that's really our philosophy and goal around here. So what are we going to talk about? I think there's a lot to talk about still in the markets and what's been happening, so we'll spend a little time on a market recap. I've kind of given a little precursor to the theme. It really is the tale of two time frames, and I'll show you what I'm talking about, obviously, as we get to that point. Personally, I still think we've got some headwinds, so this bullet point kind of ties together still with the market recap, so we'll spend a little time for sure seeing where we are in the market and where we could be going and what the possible scenarios are. Holly was busy today. We'll take a look at the AI recap and the trades. Interestingly enough, all longs when we came in today. We'll show the screenshot. No shorts. We're testing very well last night, which was interesting. The trade of the week, the real flagship of this webinar was eBay. So we'll talk about the genesis of how eBay came about and why. And then I think we'll have probably a little bit of time for some Q&A towards the end, and we'll just take it as we go. All right, we'll save that for the end of the session, and welcome to my desktop here. What we'll do is we'll start off with the market recap. And I don't know, I know there are a lot of regulars that come to the webinars, and there are not some regulars, but last week what I left you guys with was telling you essentially that these moving averages were going to start cross over and have a negative slope. And basically the price action at some point was going to find a level to bounce from, but they were going to most likely bounce right back up into the pocket, as I call it, or the headwinds of the declining moving averages. And that's kind of where we find ourselves here. So what I had mentioned last Tuesday is kind of coming to fruition. You know, Andy and I have been around the block enough times to see trends break hard on hard volume, only to have a really nice giant green candle here. We talk a lot about some of the biggest rallies can occur in corrections or sellers markets or bear markets. Can't call this a bear market, we just can call it a correction. And it was about a 10 to 12% correction across the board at its worst. But first thing I want to highlight, guys, is the volume bars here. Look at the volume today. This thing is just a tiny little speck compared to the volume bars that we had working last week in the downside volatility. So what I'm seeing here in the spiders, and I'll just kind of stay on this one for a little bit, was we definitely found our support down here. I'll probably just even use that bottom ledge as a secondary support S2 line. But we bounced definitely with some vigor, but look at the declining volume. So we're bouncing in price, but our volume is tapering off. And that's the scenario that I was kind of most worried about if you're a bull and you want to keep this market going, you want to keep the buy the dip already going. We are about a day and a half or 2 days away from running right smack into this declining 10-period moving average, which was all the rage on the way up. The 10-period held the price numerous times, here, 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 and then again here. And then once we broke it, the 10-period actually changed its color. It no longer was a supportive hand, it was an oppressive hand. That line now holding down the price action ever since this day. So what's going to happen is we've got a meeting, fait accompli, probably tomorrow or the next day, with this declining with this declining moving average. Now, here's two scenarios. Here's the scenarios the bulls do not want to see. Here's the scenarios the short sellers and the bears do want to see. Tomorrow's wick could pierce through this declining moving average, and hey, what do you know? Midday, we're in it. But then it's just midday. if the closing session occurs and the sellers show back up and we have a giant wick, kind of like this day right here that protruded through the blue line in that same fashion, if we get one of those wicks that protrude through the declining 10-period moving average tomorrow and close like that, then I'm even more inclined to say that we're not finished yet to the downside. So again, imprint on that wick right now. If that's the kind of wick we get tomorrow that trades through but closes back below the price declining 10-day moving average, watch out below, because that declining bounce and declining volume, I mean, with the price action bounce, not a very vigorous bounce like we had back here. It's kind of last 2 days have been kind of quiet, but we do have these major headwinds that we're going to be moving into. Let's take a look at the NASDAQ. NASDAQ, same sort of scenario, a little different positioning of the moving averages, but once again, we have not only the declining 10, we're still below the 50 on the NASDAQ. So these two converging moving averages are going to have a lot to say in terms of where the sellers and the supply of stock comes into sale tomorrow. I think Andy's right. I think we're gonna learn a lot tomorrow after the close and see. So on the flip side, if we go back to the SPYs, I only gave you one side of the coin, which was the bearish side. Maybe we do hit this line and wallow a little bit, but then push through and have a nice green candle and close. That's the operative word. If we can close back above this declining 10-period moving average, well, then the stage is set for chalk one up for the bulls, because they overcame basically the first obstacle that we're going to run headfirst into here tomorrow. So tomorrow's close, I think, is going to give us a lot of insight as to what this market wants to do in the near term. The Qs, same thing, like I was just saying, the 50 and the declining 10. We're going to have a lot of stock for sale right here, I'm anticipating tomorrow. The Dow, the diamonds using the ETF, similar type of stocks. Again, back to the 50-day moving average, the big wick through and the failure, and then look what happened the following day. In this particular case, the Dow is even more aggressive than the Qs, because the 10-period moving average has already crossed the 20 and the 50, and is definitely going to come into play tomorrow. So we should probably, and as a matter of fact, it kind of lines up perfectly with those two highs there in the closing candle. We're going to see a lot of supply, I think, come for sale tomorrow if we get up into these levels. Don't be surprised if you see that, guys. And the IWM is actually the worst of all. Hasn't bounced at all. It's just kind of sat and waiting sideways for possibly the guiding hand that could come down and force the price action issue going lower. Let's check in with the VIX. I haven't even really looked at much at the VIX.
Hanging around.
It's hanging in there. It's not pulling back. In the past, we would have a spike and then an immediate reversal the next day, right back into normal land. But today, the VIX is holding its own up here. So there are people that are still buying protection and buying insurance for their portfolio. But like Andy points out a lot, you really need to pay attention to when the price action and the VIX don't really marry up. If the prices are moving higher, the VIX should be moving lower. But as the price action has been moving higher the last couple of days and bouncing, the VIX is just going sideways, definitely holding its own here. So that's the story, guys, on the daily perspective. I'll show you what it looked like. Let's just go right to it, because I kind of teased a little bit talking about the tail of two time frames. Well, I decided to at least leave the 10-period moving average on my 15-minute chart for a little while longer if the markets are going to remain volatile. As you can see, as I said last week, the 10-period was the guiding hand that pushed the price lower. That's why I call this the momentum line, or the fast line. When the price is in momentum type mode, up or down, the 10-period is usually going to be the guiding hand that pushes it down, or in this case, propped it back up for 2 days. Look at the reversal here a day and a half ago, and the price action held there, and then into Monday, yesterday, held there, definitely held here, all the way into the close, and then kind of broke. Well, this morning we found ourselves with a bit of a gap down, and as we look at the Holly trades, a lot of longs were triggered in the early morning. But look at what happened with that 10-period today. As it rolled over, we ran right smack into it. It's almost like a net catching a bird, For about an hour there, it caught the price. And then we had our epiphany, our moment where the price action broke back through the intraday 10-period moving average, chopped around for about an hour, and then decided, you know what, I do want to go higher. So aside from the last candles here kind of bleeding through at the close, this was a constructive intraday chart in terms of recapturing the 15-minute 10-period moving average. That's the 10 simple moving average on a 15-minute chart. So it recaptured that going into the close. But the bigger picture is light volume, and we're bouncing right into that pocket of major headwinds.
Mm-hmm.
Did you want to add any insight, Mr. Eddie?
You covered it pretty good, Steve. I would like to say, I mean, when you have I mentioned to Steve today that 10-period moving average is like an alpine skier. You got a very steep slope there, and a lot of times the steepness of the slope can kind of signify the amount of momentum. Take, for example, the slope when we moved up there in January, in the first part of January. See, we just look at that momentum we had, very steep slope. Well, now it's just the opposite. We got a steep slope coming down, and which is even going to make it harder, I think, for the averages to push through there. I mean, it's been so resilient the last 9 years that many, I'm sure, think that we're just going to return to the normal price action. But Steve and I are holding out our reservations because we see, yeah. This hasn't been a strong bounce at all. As a matter of fact, the line is coming down to meet the price. So
yeah, exactly.
So we'll see what happens though. Yeah. But that steepness is something to keep, to beware of. Yeah.
I hate making predictions, but gun to my head, it still feels like, from my experience, that the chances favor another test maybe of these lows in the near future, as we run out of steam and volume here, and we hit the declining sloping moving averages. I don't have the chart handy. What is it? Not that one. What is TLT? Yeah, well, this isn't the chart I was looking for, but I was looking at the yields of the 10-year Treasury over a course of many months. And I'll tell you what, those interest rates, guys, they're looking to me a little trend changey, lubricanty, meaning some of the stuff we get off this trend change lubricant chart, things starting to look like they're breaking their downtrend. The 10-year Treasury yield was not exactly looking like it wanted to stay low for too much longer. Don't mind these, I'm just clicking around. So, the interest rates, I briefly looked over, I see your comment, Mike, talking about, consumer price index coming out tomorrow. Just any whiff of inflation, this market is not going to like. And if you can get yourself a visual on the 10-year Treasury yields, you'll see that it's been a horrible downtrend and has been basing for a year and a half. And now we're starting to uptick and start to break those downtrending interest rates. But again, I apologize, I don't have that chart to show you. But that could be something that the market does start to throw a fit over and things like that. All right.
For real quick, for some people that may not, there's obviously a fundamental reason why you need to keep an eye on the bonds, because over the last 9 years, we have been basically forcing everyone into risk asset. I see my, parents and father-in-law, and they're loaded up on Amazon and Apple. I'm going, my Lord, you don't need to be doing this at this stage in your life, but they don't have a choice. And so what happens is, obviously, as yields come up, and now they have a few more options. Maybe they can stick it over here in a 10-year bond and get, down the road maybe a little bit here, 3.5%, 4%. So now you're talking about some options versus just having all your, funds in risk assets.
Yeah, people have definitely been chasing yields because there's no rewarding the savers. And another concerning chart, again, which I don't have, but I showed you earlier, Andy, was the consumer debt is at an all-time high when you put together mortgages, student loans, and credit cards.
Sure.
You keep hearing the economy's great and the unemployment's so low. Well, why are people still using credit cards to make ends meet out there? But anyway, we don't want to turn this into a macroeconomics forum. So let's see. My point was when I mentioned the tale of two time frames, the daily, I think we've got some work to do. But today, was positive in terms of price action. Never mind the anemic volume, at least we kind of caught ourselves here midday and recaptured that 10-period moving average into the close. But I'll tell you what, my spidey sense and my 20 years of trading tells me we got a lot of interesting stuff coming up tomorrow when we hit these levels on the downward sloping. All right, where to next here? Let's see. Let me go back to my. Yeah, those are the headwinds we talked about, guys. Trying not to get too caught up in the fundamentals of the market, but technically, These are the headwinds that are coming, and we're bouncing into the headwinds with very low volume, very little oomph. So Holly, today my first observations was I came in and I said, really, Holly? No shorts? Okay, well, my job is not to argue with machine learning. That's what the machine learned over the course of the most recent data that the AI worked with last night. So came in with a bias today, and the bias appears to have worked. Interestingly enough, the best performance, I think, was in the first part of the day. We had a little choppiness here. If I go to risk off, that kind of tells the story. Midday was a little bit of choppiness, but then as we popped out of that choppiness, new trades started to come in, and then it also took the risk on higher. Once again, for those that don't understand risk on, risk off, it's a great bellwether, and you can use it even in your own trading. Maybe you're in a stock long, it's not even called out by Holly, but you're looking down and you're like, oh, going into the end of the market, risk on is outperforming risk off. What that means is that the trades that Holly kicked out anyway, going into the bell and holding them to the bell on the AI window is considered the risk on data. The risk off is when the AI exits here on these timed exits, or if a stop is hit, or if a trailing stop was hit. So getting back to the bellwether here, this is kind of like going to the beach and looking at the lifeguard's flags. Is it a windy day or is it a calm day? Is the undertow really strong? If the undertow is really strong and risk off was stronger than risk on, well, what that would mean is that getting in and getting out and taking your spoils and your profits while you can before the market reverses and takes them away is the order of the day. Well, conversely, today the order of the day with a little bit of congestion in the middle was kind of a broad-based lift. So everything was long. AI had a long bias today, and the flag again. If you're in a couple stocks on your own, wondering, gosh, should I be getting out here? Well, the AI Holly is basically showing me that her trades are working better if they hold on towards the close. So maybe I should be doing the same. So just a little higher level ways of looking at the AI in what direction it's going and how long the trades are being held for, what's working better, getting in quickly or getting out quickly. But looks like we had a lot of them to go through today. And I had a couple of just ones I want to show that again kind of highlight that 10-period moving average. So here's NS, which was triggered about here, and it was holding up here, and then here, and even though this little wick jammed down, we still closed back above the fast line, and then the very next wick, base held the fast line, very next wick, but then towards the close, we started to lose it a little bit and then regain it. But it shows you, as long as the price action is staying above this intraday momentum line, hopefully it helps keep confidence and patience in check rather than punching out too early. I think the other one that was interesting was HTLD. Where are you? Well, this one was also good too. There it is, HTLD. Boy, when it doesn't even get close to that fast line, it's even stronger. For the most part, this thing wasn't even getting near it all day long. So never really a reason to get out of a trade like this when you're looking at the moving averages on an intraday scan. What was the last one? CSOD. I thought also kind of had an interesting. It did. It held up right here for the most part all morning. It was following that line, and then our trigger happened right there. The price got above that fast line, came back, tagged it right there, came up, and then started to get a little wishy-washy. So this would be kind of the area in which you go, okay, maybe we'll take half profits, maybe we'll take full profits, but using that 10-period SMA in your 15-minute chart on stocks that are in motion and a momentum, numerous consecutive candles, use that, or I'm not saying use it, at least experiment with it and overlay it and see what it tells you, because once we got a breakdown here and a close below it, then all bets were kind of off. The price actually just kind of fell apart. Those were a couple of my observations, and then how it related to a few things that I jotted down. But I know Andy has a few too on Holly, so I'll let him speak up.
Sure, Steve, and go ahead and pull that up again. I want to see all the trades. No, the AI trade. No, thank you. One thing that jumped out to me today, I was really proud of Holly today because I thought there were some really nice, smooth, orchestrated trades in a sense that look at all the timed exit versus you only had one profit save. That's impressive. Usually you have a
And one
nice
stop.
mix. Yeah, well, they obviously had a stop in there, and we had some reduced risk. I'm not saying all the trades were great. No, there were a few bad ones, but overall there was
10.
some. Yeah, very. So that's impressive because that gives you the idea. Okay, you know that Holly's getting out because she has been back tested and optimized as that being the best time to get out. But you as a trader, just like Steve was showing you, if you're monitoring your um, whatever your exit reason may be, but if it's, as long as it's trending in your ways, you can hang on for a little bit longer. And there was definitely a lot of meat left on the bone, as you can tell by the risk on and risk off profit. But besides, I mean, I love seeing that because to me, in a market that was only up marginally, I thought Ollie saw a lot of opportunity out there. And
A lot of risk on, just kept on going on those trades. Yeah.
and not only that, there was an incredible amount of basically no pain trades. I'm just going to hit hit the
Okay.
click on AXXN, AAXN. I'm sorry. Look at that trigger and pop and no pain and just what a beautiful little move there.
There was maybe 1 penny or 2 pennies out of the money right there, and that would be about it.
That's it. So very nice trade there. Let's click on the one you did. HTLD was another one that she buyer stepping in. So it was a pullback, and once again, you basically had a no pain trade.
Yeah, everyone below that blue line.
Yep, never went below it. Let's click on TSN. Another one where I believe we're buying on support. And
Where is this?
at the very bottom, look
There
at
it
that.
is. Wow, bottom ticked it.
We bottom ticked it. And
I
no
like
pain.
these ones. I like the pullback alerts better than the breakout alerts, quite honestly. That's just
Contrarian. Yeah, humans aren't looking for that. Yeah, you need a robot to find that,
Exactly.
Yeah.
This is not something your eyeball pulls up and says, "Hey, buy here." But when Holly spent hours last night with scatter plots looking at data points, says, "No, actually, probabilistically, this is probably a good place to buy." And I love it when they work like that. It's a beautiful thing.
Yep. And the last one was 8 skate and donate. And there you go. No pain at all. And that was another pullback alert. So
it was on that candle right there, exactly.
So, and look at the for a $17 stock, the risk on was 60 cents. That's a nice percentage gain. Yep, 3.5%. But anyway, yeah, that's boy, when you see the timed exits and then 4 beautiful trades there where you really felt no pain at all. I was impressed with Holly today. Sure.
I got a great segue here. Reduced risk. Well, let's just go back, and for people that are not familiar, and I apologize for the people that have heard this, there's 5 reasons that Holly exits a trade in the risk off category. Again, risk off is when the AI exits the trade, and the AI is going to exit the trade before the close. I guarantee you that. 4 out of the 5 are represented here. We'll start with the one that's not, which is too bad, but target hit is always nice to have. Would be the top end of our target. Would be a nice way for Holly to exit. And stop hit is obviously a
sucky one.
No fun, but look at how this thing turned back around and actually went higher anyway. But the 3 that are interesting, aside from target and stop hit, are profit save, which is basically saying we're going to go ahead and just punch out using a trailing stop. So the trailing stop occurred right about here where the gradient of the color ended. AI was not going to allow a trade that was up here to turn back over and roll over and go negative. So the profit save is like a trailing stop. And then we have the timed exit, of course. The timed exits are always going to correspond with our main window up here with the strategy. So on support trades, always had a time stop of 60. So if any of the other 4 items didn't happen prior to that, then the time stop would exit that trade at 60 minutes. But of course, we can continue to track that into the close, and we add that to the risk on category. But where I'm going to really make a segue here, and Andy probably has no idea what I'm talking about, is reduced risk. We don't really talk about reduced risk much. Okay, well, let's just start with this trade. Here was our entry. Boom, we went through. Hey, we're positive. Oh shit, we're negative. Hey, we're positive again. We're even more. Oh shit, we went negative again. Okay, this trade is not doing what it intended to do, so we're going to just say fish or cut bait, we're going to cut bait. We're just going to say scratch it, just get out. So reduced risk is saying, things are not lining up the way we hoped they were, and there's no point in just being stubborn and negating and dismissing all of the things that are not working that you're clearly seeing, which of course we couldn't account for when we took the trade. A discretionary trader will many times just say, I'm just going to flat the trade. I'm just going to scratch it. I'm just going to take a small loss here. And that's called reduced risk, as opposed to waiting, hoping, waiting, hoping, and then getting stopped out when you could have had an opportunity to realize, things really weren't working. Well, Holly did that today with a few trades, and she does it every day with a few trades. Well, where I'm going with this is the trade of the week. We might want to go into reduced risk mode. So let's transition to trade of the week. I would be remiss if I didn't start off with reminding you all that back here on this day, the trade of the week was called out to be cash. So all of last week, we feel that we did a good service of not getting people involved in something that was going to just be a wild roller coaster ride. So cash was definitely the call for last week, and no qualms, no regrets. Happy that call was made, and I love the timing of it. But we don't want to do that again. We got to find something that's working. So we found eBay, and we had been watching it. Andy did a demonstration for some wealth managers, and this happens a lot where the earnings gap up like this, and what happens is a lot of the people that were in down here say, oh, this is a wonderful, wonderful profit. I'm not going to look a gift horse in the mouth. I'm going to take half, maybe sell it all. I'm going to take my profits. And for the people that bought up here, well, they're skittish. They're wondering, oh gosh, when is this going to stop? Well, we all talk about gaps being filled. Long story short, we had our eye on eBay throughout the week, and sure enough, right after this beautiful downtrending hammer came in and tagged the closing of the gap pretty much perfectly, bounced with a really nice close on Friday. Would have been nicer for a little bit more upside, but nonetheless, there's our bottoming tail, our
and the
hammer
20
tail,
period.
and the 20 period, which begs, if I go back, if you dig up the email, you'll see that it was showing up on Friday's afternoon scan as one of the more stronger stocks in relative volume speak that pulled back and bounced off of its 20-day average. And so we call that the pullback above the 20 SMA, and that again is in the email. So here was a stock that not only were we watching, but it actually showed up exactly when we wanted it to, at a place we wanted it to. And what do I mean by a place we wanted it to? Well, I mean, let's look at what happened to Facebook and Apple and Amazon. They all took a beating. Okay, they're not on their trend lines anymore, so to speak. All right, but eBay, basically, great timing on the great earnings, because the selling of the gap and the profit taking all occurred during last week's volatility. And once the volatility bounced and abated on the Friday afternoon going into the weekend, eBay's still right there, right on its trend line. So it was kind of a no-brainer. One, we don't like to pick stocks for trade of the week to go short. A lot of people are not comfortable shorting. A lot of people are using their IRA or their self-employed IRA accounts, which don't allow that. That's not to say that don't be surprised if you guys see an ETF like SDS at some point, which is a way that the market can, or that we can hedge ourselves against open positions by buying an ETF inverse that doesn't have to be levered ×2 or ×3. We all know what happens when we play in that space. We go the way of the XIV, just Frankenstein ETNs that were never really designed to do anything but take your money. So back to eBay. Earnings are behind us. That's always a good thing. We don't want to call trades of the weeks that are shorts, nor do we want to call trades of the weeks that have earnings in 4 days. That doesn't do anybody any good. You just, we don't preach about holding full positions into earnings. If you've had a nice run and you got some profit, you want to take half your position off and go into earnings, that's a different story. Been known to do that. But, you lose control when the bell rings and earnings are after the close and you're still in your full position. So we don't like to call stocks that have earnings coming up. So earnings were behind. So everything kind of lined up for us here on eBay. We didn't want to call cash. We didn't want to call an ETF. We wanted to call a stock that could have potential to go long, and a stock that already had earnings behind it, and good earnings at that. And technically still in the track, still in the zone here on the trend line.
Mm-hmm.
Now, where am I going with reduced risk? There's nothing that says that if somebody's in the trade of the week that they have to hold on to their suggested stop, which I believe is down here around 40 and 50, 40.50. I would have liked to have seen eBay cruise higher and close above the fast line that we've been talking so much about, but it didn't. It did that ugly thing where it wicked above and then closed back below. So we saw in some other charts in the SPYs and the NASDAQ how that didn't work out so well at the 50 period. Let me show you one more thing before I really try and drive this home. This was today, and I've been known to do these screenshots. This is what I'm watching, and I try and teach people. Here's the critical level. Here was yesterday's high in eBay. Here's today. Here's eBay going through yesterday's high. Here's why I didn't give it really two extra thoughts of adding or doing anything, because the volume was absolutely anemic. The relative volume was 0.8, and the 5-minute volume was 60%, and the 1-minute volume was 60. This is not what I want to see as a stock's going to new highs. So if I was thinking about taking this trade, first thing I would have done and looked at that and said, nope, pass. But if you're already in this trade and you see this, well, these are starting to be some of the red flags that maybe Holly sees, like I showed you on that example of the reduced risk, going up and then coming back and going up and closing below key levels. Well, we're basically just kind of hovering, right above the entry here on eBay. So I would have liked to have seen yesterday, or I would have liked to see today build on yesterday and build on the day before, because I've said before through my 3-day bounce scan, which probably is back testing horribly right now because of the way the market has been so volatile. This thing's been blank for a few days, and when I do back test the 3-day balances that look something like this, they don't test very well after 3 days. You seem to kind of overstay your welcome after 3 days. So what I'm saying, guys, I wouldn't hold it past anybody if they wanted to maybe lower, tighten their stop, maybe under the body of this candle, or even tighter. It's up to you, or maybe use that 20-day moving average. Mm-hmm. So I'm trying to kind of bring it home, whereas Holly throughout the day is constantly evaluating, what is the trade doing compared to what did we expect the trade to be doing. And that's kind of where we are, I think, on the trade of the week, guys. And I'm just going to go ahead and say it. Last year was great. I mean, we had some beautiful moves last year. When you got the market up 40%, it's kind of hard to fail at least picking a decent stock here and there. But I feel that this year is going to be a little more challenging, or at least this quarter is going to be a little more challenging. We're not going to have a whole lot of time to let these things breathe and move higher. If they fail, they could fail really quickly, and we have to keep that in mind. And so going forward, a lot of the trade of the weeks, I think we're going to really try and tighten up the stops and tighten up the targets, and try and go for some more quicker hits rather than, hey, let it ride. This market is just never going to roll over. I mean, you're a fool if you believe that. So reduced risk was the thought that I had that can be played, because honestly, I'm not really liking the follow through here. It's not doing what I really would have hoped. And coming on the heels of my sermon on we're about ready to run smack into the headwinds of declining moving averages on low volume, again, that's not boding really well on the 3rd day after our signal. So caution, guys, you don't have to ride this thing all the way down to the suggested stop. The risk management is totally up to you, but I would have liked to have preferred, in a technically speaking way, seen the green close below that 10-period moving average for eBay, the trade of the week this week. Mm-hmm. Any thing you want to add to that?
Yeah, maybe. I mean, if you zoom out, I'm big on trend lines, and I do like the trend line going back to the 1st of December. Actually, just the 1st of December.
Clear that out there. Okay, I got it. You talking about right here? Yep. Let's draw it.
Yep, let's draw it. I mean, so this is another thing that you could use as a potential stop area.
True. So let's put this in motion and actually draw it to reflect what the price action is. We got to be true to it. Now, we could go through that wick if we wanted to, because most of the congestion is right there. But technically speaking, that trend line is still even lower than what our current stop was.
I wasn't sure exactly.
It was 40.50. It's actually right. It's right on the trend line. So, yeah, make of that what you want. Risk tolerant. You could always unload half if you don't want to risk it down to there, and then watch how it trades. If it gets there and if bidders jump back in, you could buy half back. There's no law that says you have to be all in or all out binary, 100% in or 100% out. We talk a lot about the trader psychology, taking a third off and letting the rest work for you, then taking another third off and forgetting about that last third. Were you going to say something?
No, I was agreeing with it, and this trade could very well. I mean, honestly, you got to look at what's happened here. Okay, obviously they had some really good earnings. Okay, at the end of last month, that's a pretty big gap up there. Okay, so you know, I'd be real surprised if it just blew right back through that gap again. So it may be one of those things that may, you know, depending on what the market does, it could slop around sideways, you know, for a while before it decides to, maybe the 20 comes up and forces the action higher. I don't know, but
I think we've given good reason for 40, 50.
Oh, absolutely.
To be the drop dead zone. Yes. Okay.
By then you might be at that trend and the gap.
Yeah.
So sure. Mm-hmm.
Yeah, so it's just, you know, eBay just feels like it's trading with the backdrop of the headwinds that we're going to be facing here. So I would have liked to have seen a better close today. So, you know, risk flag up, profits say, not profits say, but reduced risk, you know, could be something that we learn from Holly and apply that to the trade of the weeks, you know, regardless if it's a swing trade or an intraday trade. If it's not doing what we expected, there's no rule or law that says we have to write it back down, especially if you see the market start to get hammered. You know, that's always going to be the first indicator of what's happening. What's the general backdrop doing versus what's my individual stock doing?
Mm-hmm.
All right. Yeah, I think we got through kind of everything we wanted to talk about today. It didn't touch too much on the technology, but you know, a lot of what's happening in the markets, because this is new stuff. I mean, we were a broken record for 2 years, it seems like, talking about, another trend up, another slight pullback, another buy the dip. Okay, but things are different now. Things are much different, so that's why we wanted to spend a little bit more time on some of the nuances of what the price action is showing. You know, so we got about 5 or 8 minutes. If anybody has any questions, I appreciate you guys have not been asking a lot of questions, which is nice because it's not distracting. I can kind of keep the flow going, but this is your time now, the last 5 or 8 minutes here that we got. So if you have any questions, go ahead and open up that questions box and fire away. It might not even be too early to start looking at charts, but you know, we can try that. If you got a symbol you want to look up, you know, don't feel bad if we kick it back and say, this thing's still too messy for us to really try and get a reading on. So, all right, somebody's wanting to know about BLOK. Okay, so seeing the same thing, this must be a new issue because the moving averages are fresh. But what I'm seeing is sideways action with a declining, I still got a bug here, with a declining 10-period moving average and supply right there. This thing, I don't know what it is. It seems to be amplifying kind of what the major market's doing with that same line right there. If you can't get back above this line right here,
did you look at the name when you said amplifying?
Amplify. I must have. Yeah.
Wow. Okay.
I think I did. I think I looked over and.
Okay, I was going like that. That was crazy.
Again, I need to upgrade to the newer version. We're still working on some of these moving averages, but that line of resistance, you're going to have some sellers meeting here. So whoever asked that question, Tom, if you can get a trade back above there, maybe above 1950-ish, then possibly you could break that downtrend there. HTGM long. Oh, Holly was liking that thing a little while ago. HTG molecular, so this is electrotherapeutics. I love the way the volume's coming in, and look at how once the volume came in, Holly started to take note as well on the intraday volume spikes. So we got a higher low here, a higher low here. The moving averages are kind of a mess, but what else do we got? A short float of 22%. That is significant when you consider the float is 10%. I'm sorry, when you consider the float is 10 million, Christopher. You could have the beginnings of a short squeeze here. Gosh, this kind of reminds me, damn it, pisses me off.
I know.
Speaking of short squeeze, this was a trade of the week that got stopped out on the volatility, but that's not to say that the short sellers still can't have. That's what you were kind of thinking, Christopher. Yeah. Was that the right one? Which one was it? Oh,
That
HTGN. So hold on. You know, the
Yeah.
volume is kicking into gear. When are earnings? We don't have an earnings date, so there's no threat near term. But this is a perfect recipe. 10 million is a small float, and 22% is a significant amount of that small float that could be wrong. And how wrong could they be? Well, they've been higher, but all these people that have been shorting it down here under $5, under $4, probably don't want to see this thing get anywhere near 5. So still some meat on that bone, perhaps, for you, Christopher, on the short squeeze method play. What are your favorite scans for 2 and 3-day swing trade? That was what I alluded to earlier, Brandon, the 3-day bounce. And again, I don't think I have the PDF loaded here, but if you want to request the PDF, it's got some of our favorite scans on there under my name. It's called the 3-day bounce. This used to test really well until the market broke. But what it's looking for are basically kind of candles like this one in a giant sense on this example, and then hold for 2 or 3 days. That used to back test really well, kind of like I was alluding to earlier. The market doesn't seem to want to give you more than 3 days before we have some sort of a hiccup in price. So I really do like the 3-day scan, the washout bounce scan. Also, there's one, W was threatening today. This is a short squeeze above the 52-week, and that's a top list called Squeeze Me. I also like Squeeze Me a lot, but we have to set our price alert. So this one faked us out today. It broke the price alert, and then it traded back down. That's not to say that it's not finished with its attempt to maybe make another assault. And if it does go to 52-week highs, well, then you got 41% of the short float that has to figure out what are they going to do, because they're currently screaming fire in a crowded movie theater. Okay. One last question goes, we'll go to Waleed. Can you explain the relation between the float and the short float? Oh, great question. Good question, and good question to end on. So think of it as a speedboat and an oil tanker. All right, that would be your float size. Hey, that's a pretty good analogy. Float. How much water are you displacing to float? A giant oil tanker is going to be your IBMs, your Intels, your AMDs, things with hundreds of millions of shares in circulation. So when you think about trying to get price action to move and move the needle on something that has 500 million shares outstanding, it's going to take a lot of strength and oomph. But when you got a little speedboat that's only 10 million shares, well, that's a lot more adept and can move quickly from point to point quicker. It doesn't take as much oomph or as much to move the needle and turn the bow and make it move. So that's probably a good analogy for the float. Therefore, with that being said, when you add the short percentage on top of it, you've got people, and again, let's all remind ourselves, what is a stronger emotion? Is it greed or is it fear? I think we all agree fear is a stronger emotion. So when you're a short seller and you know 40% of the same stock is short along with you, you should be very fearful that you're going to get blasted and the price is going to get away from you quickly. And so when you have, where was I? What stock was I on when I was talking about that, Andy? The 10 million?
Wayfair.
I guess it was on the stock
W.
Wayfair. Okay, so it doesn't really matter anyway. To Waleed's question is, why does a low float and a high short float be a perfect storm? Because again, the low float, in the case of Christopher's stock only having 10 million, let's put his back up there, what was it?
HTMG.
HTGM.
There you go.
Okay, so using these metrics here, only 10 million shares, again, that's a speedboat. Doesn't take much to move the needle on where the price action is going, because you don't have hundreds of millions of shares, still sitting there. And the short float, anything above 20% is significant in my eyes. So when you think about it, you have all these people in fear, as we just discussed, fear being the biggest emotion. It's much easier to drive a stock with only 10 million in the float and create a short squeeze than it would be with a stock with 510 million in the float. So hopefully that was an answer that maybe even other people were looking for an explanation on, because I felt that was a pretty good analogy, didn't you, Andy?
Mm-hmm. Yeah, very good.
All right, guys. Well, that's all we have for you today, but Scott does have a few items of interest, especially if you're somebody on the fringe who was thinking about signing up here soon. You're going to want to hear what Scott has to say. So let's go ahead and bring Scott's microphone back in. And hello, Scott.
Hey. Yeah, with some announcements to kind of roll through and make sure everyone's aware of this stuff. Okay, well, first let's mention we have a podcast. Everyone should subscribe to it because new ones come out on Fridays and they're fascinating. Just search for Trade Ideas Podcast in whatever app you use to listen to podcasts in and subscribe. Go ahead and listen to the last couple of episodes. They average between 15 to 25 minutes long, somewhere in that range, and good stuff. So we should have a new one out on Friday, usually around the close. So make sure you get yourself hooked up. Steve and the other educators here at Trade Ideas are nice enough to put together an ebook for you all to help you through this turbulent time. It's what to do to make sure that you can win in a market that is turning around. The bears are coming out. Just go to that URL, trade-ideas.com/ebook, put in your email address, and the ebook will arrive in your inbox. It's good stuff. Share it with some friends. Share the link with your friends so that we can invite them to our webinars too. You know how that works. And then, of course, we have the announcement. This Thursday, prices go up. So you have until midnight on Valentine's, midnight tomorrow night, to get in on the 2017 rates that are going. Everything's going up by about 10%. 20%. And that's starts soon, so make sure that if you do want to get in on the 2017 rates, do it before Wednesday midnight. If anyone is subscribed before then, you retain whatever rate you're subscribed at ongoing as long as your subscription is continuous. We have people that are still only paying $40 to $45 a month because they subscribed 5 or 6 years ago, and we've raised rates a couple times since then. So it's just notice. If you are interested in subscribing to Trade Ideas, it's a good time just to get that rate locked in. Standard annual is going up over $1,000 a year. Premium annual is going up over $2,000 a year, to over $2,000 a year. So if you get into that premium annual at $1,888 ongoing, you can subscribe now using the Valentine's code and save 23%. So this code is good until the same time, midnight Wednesday, February 14th. The Love Change, all caps. It's a big discount, 23% off your first month or year. Combine that with getting in on this low price before the prices go up, and you will have an advantage over everyone that comes on to subscribe after this. So, do take advantage of that. You can download a handout with all this information. It's in your GoToWebinar interface. Just expand the handouts panel and click on the PDF, and you get all this information to save to your desktop. And if you have any questions, email us info@trade-ideas.com. We also do have a code that's good till the end of the month, but it's 15% off. And since the rates are going up on Thursday and Love Change expires that night too, that code is actually not the best one to use until Thursday, but then on Thursday the rates go up. So you could apply Love for Holly 15% off the higher rates. And I don't have that on that slide yet, but that'll be on next week's slide because will be more expensive next week. So it's time to get in. If you have any questions about that, email us info@trade-ideas.com. You can shoot Steve an email if you got a question about the webinar. Andy is also reachable, Andy@Trade Ideas. Steve's @TodayTrader on Twitter. Find us on Facebook and, share all our stuff. We love that. We'll have a recording of this up later on tonight or tomorrow morning. You'll get an email reminder about how to find it. And that's it. Check out the recording. You'll get an email. Thank you, Steve. Thank you, Andy.
You're welcome. Yeah, Ray, you'll get an email. It's on our YouTube channel later tonight. Give it a few hours.
Yeah, or tomorrow morning. But it'll be by tomorrow morning at least. Remember that price change goes into effect tomorrow at midnight. So does the expiration of that Love Change promo code. So if you're on the fence, go to the trading room early tomorrow. Spend some time. Maybe go to the webinar tomorrow night, the Q&A webinar. You get an invite too. But do make up your mind by tomorrow night, or else those rates are gone, and we will be in the new rates. And there's no looking back. We've been adding a lot of features since we last did this adjustment, and it's overdue. All right, guys.
Thanks, Scott.
Andy.